Hello everyone. Am I audible? You can let me know in the chat. Perfect. Yep. All right. Let's wait for another 5 minutes, and then we'll kickstart. Hello everyone. We have about 7 attendees. Shall we wait for another 2 or 3 minutes, and then we'll start. So just another round of check. So you people are able to hear me correctly, right? So you can let me know on the chat. All right, fine. Hello, everyone. Welcome to the webinar. Um, my name is Shashi Bhushan, and I'm a trader, come trainer, NISM certified. I mean, I'm a kind of IT consultant as well as trading is my passion. So to give you heads up about myself, I've been in the industry for more than 10 years. Have 6 years of active trading experience. I'm a active trader as well, and I give sessions on options. I'm a options guy, and and no, I'm sure that most of the people would have joined the session as options is something like that they look forward for. There are myths and pros and cons of options. So I'll try to cover as much as possible. Uh, the main thing what I wanted to give is a lot of people have a misconception of options: unlimited risk, limited profit, or unlimited profit. So these are something like catchy words which most of the people do hear and get carried away. Um, in options, as far as my experience goes, and people who actually believe, you should always look at the percentage terms of returns instead of absolute terms. You might be, hearing a lot of stories, people saying that they bought an option for 10 rupees and it made 100 bucks or 150 rupees. Yes, there might be, cases, but were they part of the entire journey is the question. Okay, and that is not required. That is not at all required. If you, trade options as a mathematical permutations and combinations, you will make a very consistent and a great income. I mean, see, I am IT consultant, so I get a handsome salary as well. So what I'm trying to do is, along with my with my monthly income, i try to I try to uh, create the option, create the strategy in such a way that I get at least 50% or 60% of my monthly salary. It is possible. Okay. With not much of further ado, let me proceed with the slides what I have, because I have got a lot of things to cover. And the main content that I have is, can we make a monthly income with options? Yes, it's possible. It is certainly possible. Okay. Let me another round of check. Are you people able to hear me? Am I too fast? If you have any questions, you can stop me and you can ask me questions. I have not started anything yet, but again, I just wanted to make sure that you people are able to hear me correctly. Can I get a yes or no on the chat, please? Perfect. Perfect. Yeah. Thanks a lot. Thanks, Janardhan. Thanks, Jishnu. Binu. All right. Fine. Let me proceed then. All right. Now, what I expect. Okay. What I expect, from the people who are actually joined is, should have a basics of option. And option is like an ocean, so it is it cannot be covered in 1 hour. But what I expect is, the audience who are attending would have basic knowledge of options. I'll try to explain with layman language. But again, what is a call option? What is a put option? What is option Greeks? What is a straddle? What is a strangle? It's something like which you can get it online. You can go to YouTube, and you'll be able to uh, you know get the data. Sanjeev, yeah, Sanjeev, you're saying no. No for what? I mean, are you not able to hear me? Okay, fine. So these are the prerequisite knowledge that I actually expect. Let me, try to make it very, very. There is a disturbance. Okay. Are everyone facing the same problem? Are you people, hearing some disturbance in my voice? Okay. Sunil, I think you have to rejoin. Probably it could be problem with your connection as such, because others are able to hear me. correctly. All right. So yeah, let me proceed. So this particular program, what I've actually is I've targeted for people who are just salaried class. I mean, that does not mean that others cannot participate. What I meant is, people who do not have time to, look at the market all the time, and who are expecting a consistent monthly income, and who are also happy with small profits, because you know calculating profits in percentage terms, and I mean, as I clearly mentioned in the starting of the call, that you need to always calculate profits in the percentage terms instead of absolute terms. Okay, that is the main thing what I want to cover. All right. Now let me tell you, with the best example, what is an option. Okay. So I don't want to bore you with the normal explanation that you find it in the you know Investopedia or in YouTube. I try to make it very very simple. Option is nothing but an insurance. Here, the best one would be a car insurance, because most of the people in IT industry would have a car, and they know about what exactly is a car insurance. See, option is something like it's like a car insurance. So if you buy a car insurance, that does not mean that you don't know driving. Okay, it is something like it is a cover. It is something like you're being protected. That's what option is. So if you use the option in a very smart way, okay, you can make money. That will cover. The strategy part will cover later. So what I wanted to make you understand is option is nothing but an insurance for a underlying asset. Underlying asset would be your future. Okay, it could be your Nifty or Bank Nifty. Predominantly, I trade in Nifty and Bank Nifty, and I trade in weekly options, but I don't. People who are getting into options for the first time, or getting into trying to learn options for the first time, would not encourage them to get into options, weekly options, because they are very very volatile, and the chances of doing wrong judgment would be much higher in weekly options. Okay. Nevertheless, I mean, once you get the grip, you can do it on weekly options as well. So, in a nutshell, options is nothing but a car insurance. So, even if you look at a car insurance, there are different types of car insurance. The first is the basic insurance, which is called as third party insurance. What does that insurance do? That is something like you actually hit a, I mean, you met with an accident. Okay, if the other vehicle gets either it could be the vehicle or the person who get injured. Okay, it is covering his expenses, or the vehicle's expenses, or the person's expenses. Okay, that is the third party insurance. So what is third party insurance in option terminology? It's something like buying a call option and put option. You did some analysis, you did some based on different parameters, and you got the news, or it could be anything, and you came to a conclusion the market will go up, and you buy a call option, right? So it is something like you're not completely covered. You're anticipating the market will go up, and then you're buying. So the premium, what you pay is equal into the insurance amount what you pay to the insurance company. All right. So I'm trying to make it very, very simple so that it's easy. So that is one kind of insurance. The basic insurance is the call option or a put option. Okay. There are a lot of strategies. I'll not be able to cover all the strategies. I'm just trying to make it very, very simpler so that you people can understand what exactly the options on how you can actually use options for your benefit. And the next type of insurance, what is that is it's comprehensive insurance. What is comprehensive insurance? It is something like it covers the third party as well as yourself as well as the vehicle. There are a lot of I'm just giving you main categories, because there are a lot of other subcategories in comprehensive insurance. So it is something like the third party insurance is covered as well as your vehicle and yourself are covered. And there's another thing which is bumper to bumper insurance. Something like no matter whatever happens to the vehicle, you're completely insured. So my main intention is, as if someone is actually working and doing trading part time, the first, I mean, straddles and spangle. What is a straddle and spangle? I'll try to give some simple examples. So the first two types of insurance would not be much advisable for them. So I would advise a person who is actually can give, but every day keep in touch with the market, check where it is actually, is it closing green or is it closing red, based on the, and doing the adjustments, small adjustments. They can opt for neutral strategy. What are the neutral strategies? There are a lot of neutral strategies. Iron condors. There is gold butterfly, iron butterfly. Okay, so different strategies are there. What is bumper to bumper insurance is nothing but no matter whatever happens to the market, you are completely covered. So I will be covering today's monthly income strategy is something like kind of a small piece of bumper to bumper insurance. It's not because in 1 hour I cannot squeeze everything in the strategy construction, because there are a lot of things what is there in the strategy construction. But I'm trying to make it very very simple, in a simpler manner, so that you understand that yes, there is a way to make money with basic understanding of options. Okay, all right. So let's proceed. All right. Now the next question comes is whether you want to be an option buyer or a seller. Because most of the people say that only option sellers make money or only option buyers make money, right? So that's the common question. Here are my the option buyer is nothing but a gambler. Don't take me wrong. I've used the word gambler with the example, in the sense who is a gambler who actually bets. Okay, he pays some money. Okay, and then he bets that so and so. I mean, I'm referring to a casino, right? And the option seller is one who runs the casino. Okay, if you look at there is something called as, in options terminology, there's something called as POP. POP is probability of profits. Who makes highest POP is the option seller. I'm not discouraging the people who buy. Yes, you can, but you need to construct it really really good, and there are strategies with which you can make. But again, constant monitoring in option buying is actually required compared to option selling. But if you're an option seller, the margin is on the higher side. I'll come to the margin part. How much is required, and is it something what you can afford. So all those things are there. So now I've given you both the sides of the coin. So now you decide whether you want to be a buyer or a seller. Option gambler, as the term says, he may or may not make profit, but option seller will certainly make a profit, but it will be a very very small profit, very very small profit. See how I look at stock market is, why stock market or options or be it stocks trading, okay, compared to the conventional FDAs. See, if you have a fixed deposit, max to max you can get 10% per annum, right? So if you're able to make at least 50% extra, that is 15% per annum, why shouldn't you think about it? So I actually look in those terms, because that's what I was actually mentioning in the initial slide, that you should be happy with the small profits. If you're happy with the small profits, this is the game for you. And it is, see, I am an intraday trader. I'm an intra-week trader. I have monthly strategies. So I make it a point that I have some some assets, and I have made some commitments. And will I be commitments, since I'm talking about I have a risk-free amount which I'm ready to, because option market is something like you have to invest the capital which you're ready to forego. I mean, because that should be the mindset. If you take a personal loan and then you start investing, not advisable, strictly not advisable. Okay, but there is a way. I mean, if you follow it consistently, certainly you can think about taking it big. Let me come to that strategy part later. So yes, and most of the people always say that there is unlimited risk and unlimited profit. So these are all something like it's fancy, or in case they want to scare you, that there's nothing called as unlimited. Don't you think buying a stock also has unlimited risk? Okay, there are people who bought DLF $1,000. Now where is it trading? It's trading sub 100 or sub 150, right? So that's also an unlimited risk. See, when there is a stop loss, people say that in option selling also you can put stop loss. Okay, where to put is something like what you have to practice, and you have to adhere to the rules. That is something like what you have to follow, because most of the people, I've seen a lot of people buying call option at $100, thinking that it will go to 120 rupees. Once it comes to 80 rupees, they'll not book the loss. They'll think, okay, no, today, it is trading at 80 rupees. Tomorrow, it might come back to 100 rupees or 110 rupees, then they will exit. In options, there are a lot of other parameters. That is Greeks. Okay. So if you don't know Greeks correctly, don't be a buyer. If you know Greeks correctly, be a buyer. With very, very less investment, you can make humongous money. Okay. And Greeks is a very, very big subject. Okay. It cannot be covered in 1 hour for sure. But eventually, let's see. I mean, if there are sessions, certainly I'll try to cover one by one in a very, very layman language term, so that it's easy to understand. Right. So if you know Greeks, okay, what is Greeks? Don't go. No, I'm not trying to scare you with high funda words. Greeks is nothing but there are few parameters which will actually affect the option price. Delta, Vega. Okay. There are 5 components. Theta. So I don't want to get into Greeks now. I don't want to confuse you. So today I'm actually taking option selling as one of the small component and trying to give how you can make a monthly income with option selling, right? And stop loss is mandatory for both buying, whether you are a buyer or a seller. If you don't have a stop loss, you'll be out of the market in a short span of time for sure. All right. Now, yeah, this is my perception. Please don't take me wrong, and this is completely debatable. Okay. In a nutshell, I feel a person who trades in future may not have future, but an option trader has more options. Again, this is in column. There are a lot of things to cover. Okay, but trust me, I have in my initial stages, I've lost money as well as I have gained money, but consistent money that I've made is with options. Okay, so it is possible that you can make consistent profits with options. How? Yes, there are a lot of other strategies. So you need to master the strategies. I mean, for that you need to understand Greek. You need to understand, there are a lot of parameters. There's something called as ATR, volatility. A lot of things are there, which it is something like it will keep on adding feathers for that particular option. Then you can construct the strategy in such a way that no matter whatever happens, something like bumper to bumper insurance. So you pay a more premium. You make sure that whether you hit someone or someone bangs your car, you will get a replacement car. Your asset is safe, provided you make some profits as well. Okay, that's bumper to bumper insurance. That is a neutral strategy. There are a lot of neutral strategies. If you go to YouTube, there are a lot of strategies. Delta neutral strategy, gamma, theta. There are a lot of strategies. Okay. So let's not get into Greeks, because if I get into Greeks too much, I'll not be able to cover what I intended to cover, right? So so far, any questions? So let's not make it as a monotonous kind of a thing. So if you have any questions, please ask me. All right. So Bhupesh is asking, do we have neutral strategies for option buying also? Yes. In the sense, it will not be only buying. You need to include a selling leg as well. But again, it is something like, the best example would be a butterfly or an iron condor. Okay, it includes buying as well as selling. Okay, hope that answers your question, Bhupesh. Anyone else? Any questions so far? Hope I'm not too fast. So if in case if I'm too fast, or if you people are not able to understand me, please stop me and ask me questions. All right. But selling, yes, obviously, Bhupesh. I'll come to that part. Selling requires big investment. Correct. See, I mean, if you want to see, there's always what strategy for weekly expire. Sanjeev, I can. That's not the agenda, for because what I'm actually trying to cover in this module is not the weekly options. Certainly, you can try the same strategy. What I'm going to explain, it's a simple, very very simple strategy. You can try it for weekly options, but again, you should know the adjustments. Adjustments is very very important. If you know the adjustments, you can do it. But again, those adjustments will not be covered in this module, Sanjeev. So yes, weekly. I follow weekly expiry strategies and okay, stock options will be discussed. Yeah. See, the main reason why I'm out of stock options is stock options has got a lot of there's a lot of rigging happens. Rigging in the sense big players try to manipulate with stock options. That is there. If people think that no, that is not there, they're wrong. There is a rigging in stock options, but that cannot be the case in Nifty or Bank Nifty because of the volatility, because of the participation. All right. So Bhupesh is asking, please advise buying strategies also to start with, having limited funds. Certainly, Bhupesh. I will try to try to give you some heads up about buying strategies as well. All right. Any other questions? Am I conveying the topic? Is it clear or is it flying over the head? Trying to give you more about talking about Greeks and is it confusing? Please let me know. Oh, okay. All right. So let me proceed. Adjustment. Yes, Binu, I will. Yeah, I will talk about adjustment. Certainly. Okay. So now coming back to the main agenda, what we can say for today's session. See, this is something like what I've actually covered is very very basic. Okay, there is nothing but a short strangle. Okay, what I'm actually covering, short strangle, very very simple. But there are few rules that I've applied, uh, which you will be able to know. I'm unable to get anything on my screen. Is this the case to everyone? Suresh is actually telling me that he's not able to see it. So just curious. I mean, is it the same? Okay. Suresh, can you log back in and then check? All right. Suresh is saying, hmm. All right, fine. I'll just check out with the people who have actually organized and try to send the PPT PowerPoint. Okay. I mean, I just have bullet points. It's more of an explanation, because I just have simple bullet points. Yep. All right. Fine. So now, for the monthly return strategy, what I've done is see. Let me cover what is an ATR. ATR is average true range. What is an average true range? Average true range is nothing but let's talk about Nifty. See, Nifty, ATR is currently somewhere around 114 to 117 points. That means that on any given day, Nifty can swing between 100 117 points, up or down. That's what the ATR means. It is 14 days average. It is not one day, it is 14 days. What they do is, they take 14 days average and they actually come up with this number. And this number keeps, increasing. Earlier it was 70, 80 points, somewhere about. And then it jumped to 90, 100. Now there was a point where it was at 140 points. Now it has come down to 120. Okay. So where to get that data? That's again, most of the people will ask where to get that data, right? Is there a website that we can refer? Yes, there is a website. Okay. The no, I are you people able to see? I've opened iCharts. Are you people able to see the iCharts window or only the slide which you're seeing? No. Okay. Fine. Let I think I have an option to share screen. Second, let me share my screen. Okay. One second. I'm trying to share my screen. I think if, yeah, I'm having some difficulty in sharing the screen. All right. So let me ping the website. It is iCharts. So you people can open the link. I'll guide on the call itself. It is iCharts.in. iCharts.in. Okay. You can open iCharts.in, and when you open iCharts, on the left hand side you have to scroll down and look for Screener EOD. Okay. Screener EOD. Okay. You need to click on that. Okay, and then scroll down and you will find an option to click on export. When you click on export, it will export it to an CSV file. Okay. And then once you export and open the Excel sheet, okay, this is one of the extensive sheet what you can use. I mean, you can there's a lot of data in this. If you know how to read the data, how to analyze the data, certainly this is one of the master sheet what I can say. And this is something which is available for free, and you just need to know how to analyze the data. So that analyzation is something like what depends on strategy to strategy. That's not the agenda to be covered today. We can have a session for iCharts itself. Right. So if you open that sheet and search for Nifty, you'll be able to get what I was actually talking about. It is on the column number AM. True range is for 1 day and ATR is for 14 days. Average true range, that's for 14 days. So as of now, the Nifty ATR is one second. Yeah, Nifty ATR is around 109 points. Yeah, 110. Okay, 110 points. So how is this beneficial? So for option person, because most of the people will always say when trading option, which strike to select? Should I select a ITM, or should I select a ATM, or should I select a OTM? So this is in the money, out of the money, and so I believe that you people are aware about this, because that's what the expectation was, that you people should have a basic knowledge of options. What is an in the money option? What is an out of the money option? Okay. So most of the people will keep thinking, which one to select, right? So that completely depends on what is your time horizon. See how I do, how I actually look at monthly differences. I always select the monthly expiry. Okay, I'll show you the trade. What we took last month. Okay, this particular don't get scared with the 5 lakhs. That is like maximum investment. Okay, it is not 5 lakhs all the time. And if you have an account with a broker who can give, because see I have an account with Trade Genie, I have an account with Zerodha, okay, but I predominantly trade with Trade Genie, and just because I'm a regular trader, I get span margin as well. So which people might or might not be aware of. What is a span margin? Span margin is something like a minimum moment that is required to create when you create a strategy, and if the strategy requires a total margin is 1.5 lakhs. But if you have a very good broker who can say instead of 1.5 lakhs or 1.7 lakhs, you give me only 90,000. If 90,000 is there, in the account, you can construct that. This is pan margin. But again, it's not advisable. I always, consider the total margin to have it. That is something what you need to have. Earlier, we used to create the strategy within 60,000, but now that is not the case because there's a lot of regulations and SEBI, but there are talks that they're trying to reduce the margin front. They're trying to reduce. That is still in talks. But as of now, we'll consider the entire margin. How much is required for one future Nifty buy or sell? It is somewhere around 80,000. Okay, I've taken the margin calculator from Trade Genie and then giving you the number. Okay, somewhere around 80. If you have 85,000, you'll be able to trade one option. I'm talking about the sell side, not the buy side. Buy side, it completely depends on the premium. Like, if in case the premium is 10 rupees, 10 rupees into 75, that is 750. If you have 750 in your account, you can buy an option. All right. Fine. So let me give you some heads up. So this is the ATR based option strategy. Okay, how to construct? I'll explain you in a while. And investment required would be around 5 lakhs. It is not that it should be 5 lakhs. It is much lesser. So far from past 12 months, there was only one scenario where I've used 3 lakhs. See, what I do is maximum 3 lakhs. What is that 3 lakhs? I'll explain. Okay. And as soon as the strategy returns 2%, I'm out of the trade. And if that 2%, if I achieve within a week, I'm out of the trade, and I'll construct another one. Okay, 2%. See, because most of the people in options, they get carried away or they get lured away with the option pricing. They'll start, if they have 10,000 in their account, they'll start calculating. In case if the option price is 10 rupees, so let me buy it for 10,000 rupees. 10,000 worth of shares, and even if it goes to 20 rupees, I'll double it. Right? That may or may not happen. It might. I'm not saying that because there are instances where even I've picked up an option at 1 rupee and sold at 9 rupees or 12 rupees. Yes, it has happened. But for a person who is actually getting into the option, if they start thinking in those lines without looking at the other parameters, that is Greek, high probability of failures in those kind of trades. So you should know what you're actually buying. This ATR will give you some hindsight. What is an ATR? As I explained earlier, it is the range on any given point of day. So this is the 14 days average. So in 14 days on any given day, Nifty has actually traveled 110 points. For Bank Nifty, it is around 377 points. Okay. So what is that? How will that help you? That will help you in determining the strikes. Okay. Let's assume, today, let me go to this. Okay, let me cover the points, and then, I'll go to the construction part. Right? Let's see, maximum 3 legs, or as soon as the strategy returns 2%, exit all the legs. Holding till expiry and doing the necessary adjustment will certainly return a good ROI. There are times, where with a single leg has given around 4.5% to 5%, 7% as well. Okay. Possible. All right. I'll cover that. But again, you'll understand. You'll know. What is the max profit as soon as you construct the strategy. As soon as you construct the strategy, you'll know, okay, fine, this is the maximum amount that I'm getting it. So as soon as you if that maximum amount is somewhere around 4%, once you see 50% of that, that is 2%, get out of the trade. You can construct another one. Okay. There are, because as Nifty and Bank Nifty is very, very volatile, there are months where I have done 3 times of this kind of trades. I'm talking about 3 legs, 3 times possible. It has happened. Because that is the kind of, this is along with the weekly options. But now I'm only concentrating on monthly options. So you're constructing on the first day, 28th. So today the November series got expired. So December series. So if you're looking at tomorrow, you can plan it. All right. I'll try to cover it. Okay. And again, the disclaimer is, and I'll try to cover all the points. If you have any questions or get stuck in anything, you can certainly call me or send me an email to my email address. I'll share you my contact details as well. Okay. Let me proceed to the next rules that we have for the strategy. Yeah, here we are not talking about Greeks at all. It is very very simple, easy to construct, simple to understand as well. And the main thumb rule is never let your OTM options to become an ITM options. What is an OTM and what is an ITM? To explain, are people able to see my screen? Only the okay. So you people able to only see only the slide, is it? I'm trying to share my screen. Okay. All right. I do. Okay. It's not allowed to share the screen. All right. So what is OTM option? OTM option in a very very simple example. Let's assume what is the market is somewhere trading somewhere around 12,100, right? So 12,150. Okay. So let's take an example that 12,150 is the current market price, future price. So 12,150 and 12,001, slightly near to the option will be the after money option. So 12,200, 12,300, 12,400. These are the OTM call options, out of the money call options. Okay, and anything below 12,150, that is like 12,000 or 11,900, are the in the money call options. At the money is one within that range. You can call 12,150. Normally for trading purpose, we don't use the 50 one. We always use the 100 number because the volatility is very high. But again, if you're looking at the option side, you can also construct. I mean, because you get good premium at times. So if you know the Greeks, so let's not talk about Greeks. Let's not confuse you people. So stick to the 100 round figured options, whether it's call option or a put option. For the put option, it's the other way around. Okay, other way around in the sense, if the Nifty is at 12,150, okay, 12,300, 12,400 are in the money put option, and below that, that is 11,900, 11,800 are out of the money put option. Okay, clear? Hope I'm clear. Right now, this is 80% of pop trades. Pop trade means probability of profit is 80%. There is, see, be rest assured that there is no 100%. There is no 100%. If you're looking for or to say something like a strategy which will give you 100%, absolutely not. If someone is trying to tell you that there is a foolproof strategy, there's absolutely no risk. No, that cannot be the case. If you know Greeks, even you can increase the probability to 95%, but still that 5% is always there. Because see, there are certain events which is like this note bandi or the attack. So these things are not something like what you can actually think about. Okay, and that's overnight risk. So next day morning, if the Nifty opens 600 points, 700 points gap down, no matter whatever strategy that you've created, it will show you loss. And if you get panic, if you know to do the adjustments, good. If you get panic, you'll certainly book loss. Okay, so there's no be rest assured that there's no 100% wala strategy, 100% foolproof strategy. There's absolutely nothing. Okay, it's something what you have to think is the probability of profits trade is higher on the selling side, which I'm actually giving it as 80%. I don't want to mention it as 95% and you people getting carried away. Right? Yeah. The disclaimer is even this strategy also has a risk factor, and if there is any event, stop loss of 2% should be maintained. What that means is as you're keeping a 2% profit, like 1:1 kind of scenario. But in the 12 months, okay, in the 12 months, okay, not even a single month has actually given me loss. Okay, I'm talking about month. Okay, there are trades. There were 2 or 3 trades which actually gave me a loss of 2.5% to 3%. But again, overall in the month, it was more than 4%. I'll show you how exactly it is. So any questions so far? Sunil is saying why options nutshell slide. So is the slide not changing? Is it stuck on that slide? Because I'm on the monthly returns strategy slide, the second page. Pop slide. Oh, okay. Yeah. Perfect. All right. So yeah. So this is the margin requirement, slide which I actually picked it up from the trade genie. Okay. So what it requires is, if in case if I go for one leg, okay, this is the two leg, structure. This is for the December month what I've actually created. Okay. I'll tell you, when to create the second leg and when to create the third leg. That's the adjustment. Okay. So for one leg, approximately 1,75,000 is what is required. 1,75,000. Okay. Now let me tell you how exactly the November series trade what we did and how exactly it was actually done. See, this trade was actually initiated on 31st of October. Okay, 31st of October for the November series. So what we did was on that day, the Nifty was 1 second. I think I have that number. Nifty closed on 31st of October at the closing was we created around 315, 320. It 1 second. Give me a minute. Let me try to give you how we came to this. Why did we select 12,400, 11,400 is what I'm trying to explain. Give me 1 minute. I'm trying to pull the data. Right. The first data. Yep. On 31st of October, the closing was 11,914. Okay. It was trading somewhere around 11,900. So what we did was, see, the ATR actually helps here. How I do is, I know that there is 120 points, right? So I'll take 5 days ATR. So which means that 120 into 5. Let's keep it as a round figure, 100 into 5. So 500 points. So what I do is I actually add this 500 points to the underlying asset. Underlying asset is 11,900. So I add 500 points. So if I add 500, I'll get 12,400 on the upper side and 11,400 on the lower side. Confusing? This is what the ATR is. Okay. Why 500 points is because in a week I'm taking that 500 points cushion. Okay. Then you might ask me a question, sir. As it is 4 months, 4 weeks, or why can't calculate 100 into 500 into 4 and do a 2,000 points range? That is like very wide range. That is the much safer strategy. If you, but again, will you get the option, the buy and sell difference? Will you get it? That's the question. So I actually calculate. I'll tell you, because there are legs also involved. So I'll try to cover that. So how I got this 12,400 and 11,400? It's clear, right? So any question? Why 5 days for a week? Okay. This is just to create the range. I'm trying to create a range. So there would be a 500. I mean 1,000 points range. 500 points on the upside and 500 points on the downside. This is the range that I've actually created. So any questions? How I came up with this 12,400, 11,400. Right. So on that day, on that instance, in the end of the day, so these two, this is monthly option. These two options were actually trading at 31 rupees and 53 rupees. Okay. I sold these two. Right. So I collected a premium of 84 rupees. Right. So 84 rupees is like 6,300 rupees was the amount that I received. So as far as Nifty trades the entire month in this range, I get this 6,300 rupees. Simple. No rocket science. Okay. No rocket science. And so we did a lot of weekly options that I'm not touching. So this was a straightforward single leg trade, single leg created. So when will I do the correction? Let's assume let's take the scenario. Why 5 lakhs even? So for this it was only 1,75,000. But still I did not use that. I'll keep it. I'll try to cover. Let's assume Nifty after I took the trade. Okay, it came to 12,200. One of the thumb rule is never let your OTM option to become an ITM. So which one is risk? The 12,400 call option is in risk, right? So what I'll do is I will push it another 200 points once Nifty crosses 12,200. Okay, it did not happen. Okay, it did not happen in the November series. I think the high it was made was 11,190. Sorry, 12,151. Yeah, that was today. That was today, right? So I mean, hope you are understanding. What I'm trying to convey here. This is so once it comes very near 200 points away. Once the underlying crosses 12,200 at that time, sell 12,600 call option. Okay, and then the 11,400 you switch to 11,600. Do not exit. I mean, hold it, because you'll be getting that money, right? You'll be getting that money because you're selling it, right? So if it becomes zero, see, both the options became worthless, and you got the money. You got the complete money, right? So this is called as adjustment. What I'm trying to explain. This is very simple adjustment. Okay, I'm not touching Greeks or anything as such. Okay, I'm only talking about the simple adjustments. What you can do. So there are months where it's huge swing. So be prepared. Whichever side it comes, right, whichever side it is coming near, you just switch 200 points. The premium, see, starting of the month, you might be getting 31 rupees and 53 rupees. But if you switch it, you might get 20 rupees or 11 rupees. Okay. So if you have the backup, you keep on doing it. Once you see overall profit of 2% to 2.5% or 3% on the employed capital, get out of all the legs. Simple. The reason is, if you consistently do this 2.5% to 3%, okay, month on month, your investment, okay, I'm talking about the employed capital, not on the 5 lakhs. See, if you're investing 1,75,000, don't calculate that you have 5 lakhs in your account and 2% on 5 lakhs is 10,000, but this is giving me only 6,300. No, 6,300 for 96,000 on span margin and 1,73,000 is 3.64%. Though I have 5 lakhs in my account, I'm on my investment return on investment on 1,73,000 is 3.64. That's fantastic return, fantastic and safe return. Okay, and this, if you keep on doing it, compounding it, right? Think about the returns what you can make in a year, which is much better than your FD or even the mutual funds, right? So now let's think. Once, wait, let me. Yeah, this is the reason why I've actually done is, if you want to be a bit aggressive and be much covered. So this is something like you're creating a cushion for the range. So 500 points on the upside and 500 points on the downside. And if Nifty comes very near to 300 points on whichever side, switch another 200 points. You might get a lesser margin, but again, this is like the pop. That's what I mentioned. The probability of profit is high. Okay. All right. So I know this is very okay. Profit booking on the 2% on the premium receipt. Sorry, I was not able to follow you. I'm sorry. So yeah, profit booking on the 2%. See, what I meant is, now as soon as you construct the strategy, you'll know that 6,300 is the maximum profit that you can make, right? 6,300 on a 1,73,000 is 3.64%. Clear? So 2% of 1,73,000 will be somewhere around 1 second. 2%, 1.73 into 0.02, which is around 3,460, if I'm not wrong. So as soon as you see 3,500 overall amount, right, you get out of the trade. That's what I meant. Vinod, hope I cleared your doubt. All right, fine. Fine. So this opens up. This is a very very simple strategy and no rocket science. Okay. There are a lot of things, but the reason why I'm actually giving this strategy is, see, whatever I actually convey, right, is something which I have tried and tested. Okay. I will not be able to show you the contract note. The only reason is because it's a big account. All right. But this is the trade. Very very simple trade. Very very simple straightforward trade. No rocket science. ATR is the only thing what I've actually into it. I've not touched anything about Greeks. But if you manage Greeks correctly, Greeks correctly, you can make consistently 5% to 7% easily, right? So the reason why I only convey why I'm actually stressed about selling is it's something like sure, I'm not against option buying. I'm not against option buying, but will option buying give me a consistent return? Yeah, it's something like option buying is like buying a lottery. You may or may not. But option selling is something like you will get your returns. Like I gave an example of a casino, right? So casino and and the person who is actually betting. So casino is always on the safer side. They give free drinks. They give free cookies or free meal vouchers, all those stuff. If they are not making money, how will they know? So that is their investment. So they want more people to participate. Their main intention is people should participate. Whether they lose or make money, they will make money. Right? So think in those lines. Think in those way of thinking. There are a lot of strategies. I mean, this is the very very basic strategy what I've actually covered. Okay, without covering the Greeks. So if in case if there are people who are very good in Greeks, they might have a lot of questions. Okay, certainly those questions are valid. I'm not denying that because I clearly mentioned in my slide that options is not touched. Option Greeks is not touched. Without option Greeks also you can make money is what my intention was to cover this simple strategy. So any question, guys? This brings to my last slide. So this was the trade, and even in the month of October we did about 6%. If you look at how to look at the options is just from January you can just do a dry run. I was trying to collect the data, but unfortunately I was not able to get the complete data. So you can look at January. What is the entire month? What is the high that is made? What is the low that is made? And what was the closing? And what is the opening? Opening would be the previous month closing. Okay, and then you can look at the range. What is the range? So if in case if you make 2 adjustments or 3 adjustments in a month, still you will make 3% to 4% easily possible. Any questions, guys? How do you set ATR? See, I'm not the person who set the ATR. It is actually, the ATR is the mathematical calculation. You have to go to icharts.in. It's readily available. icharts.in. When you open that icharts.in, on the left-hand side, scroll down. There is screener EOD. End of the day, they'll upload it. Okay, and you export that CSV file, and once you open that, there is the top. There is a column. I mean, the column AM, if I'm not wrong. Yeah, that's the column which has got the ATR data, and the ATR is for all the stocks. It is not only Nifty. They've given it for all the stocks as well. Okay. True range is for 1 day. ATR is for 14 days. All right. So now it opens up for questions. Thanks, guys. And now this is my. I've shared you my mobile number, my email address, and this is my WhatsApp number. I have a Telegram link as well. 1 second. Yeah, Telegram link is also there. So, all right. So it's open for questions. Any questions? Go ahead. are on the dot, 9:58. So if there are no questions, we can wind up the session. Or if you have questions, I can certainly take up the questions. Sure, no questions. Sure, can sell OTM smaller amount. Sanjeev, see, it always, OTM, see, there is no smaller amount or there's no bigger amount. Okay. What I see is, is it something like, it is 2%, 2% on my employed capital is what if it is more than 2%, I'll be more than happy to sell it. Mean we can start with 1 lakh. If you start with 1 lakh, and if you have a very good broker, if he's allowing you to, don't do a naked selling. Never ever do a naked selling. Always do a wing, the strangle. Okay. The reason is, if you start with 1 lakh, and if your broker does not allow you, to sell the other side, it is something like, what people say, right? Unlimited risk is always there. So if you sell on both the sides, you're covered, like bumper to bumper. What I refer, bumper to bumper. So don't buy the insurance only for front side. Also buy the insurance for the back side as well. So you're completely covered. Do you take separate training session covering other strategies? Yes, I do. I do. I am actually a guest speaker for for this forum, so I don't want to do a marketing. So if you have any questions, you can certainly send me an email. I'll be more than happy to help you or guide you. All right. So it's 10. Hope I've covered everything, and do send me your feedback. And if in case the session was interesting, or any uh, changes to be made in the delivery, or any mistakes in the topic which I covered, please do share your feedback. And if you don't have any questions, we can wind up the session, guys. Very earning, uh, very learning. Okay, yeah. Thanks a lot. Thanks a lot, people. So it was great time. So can we apply this strategy to huh? I'm sorry. Can we apply this strategy 2 to 3 times? If not, reaches. I did not understand what is the last part. Venkana, right? Can we apply this strategy 2 to 3 times? If not, reach us. So what does that mean? Is your intention is can you apply this strategy 2 to 3 times? You mean to say that number of lots? If yes, yes, certainly you can do it. See, what I do is, let me, see, this was the reason why I did not include a lot of things was, what I do is, I create a range for monthly, and on a weekly basis, I keep, looking at the, the ATR, and then doing the changes in the sense, keep selling and try to collect. So there are times where I've collected 2% to 3% in a week. So 3% in a week, and on in a very good month, there are chances that we made about 9% on the overall employed capital. Chances are there because we get margin on margin. See, provided you know the adjustment, because the reason why I made it very very simple is because I don't want you people to get confused with Greeks. So that is the reason I made it very very simple. Bhupesh, yes, certainly 2 to 3 times. Yes, there are times because see Nifty is very very volatile. The reason why I actually pick up Nifty, Bank Nifty is much volatile. But again, you can apply the same strategy on Bank Nifty as well. But again, you have to look at the ATR of Bank Nifty. ATR of Bank Nifty is 377 points. Keep it as a round figure of 350 points. So 350 into 5. So that's the range. Okay. And the premium, if you're getting it more than 2% or 3%, go ahead. Yeah, you can do it 2 to 3 times in a month. Yes. So for every there are months. If I'm not wrong, July or August. July or August, we made about 6 times. Okay, we were not doing the legs. What we did was because we were getting very good. I mean, in the sense 2% or 3% within 2 days or 3 days. So that was because it was a very high volatile month, and we did 6 times in a month. Okay, if we sell for to 500 range, will it work? It will work for sure, but again, the premium is what you have to see. Please tell something about buying also. Do we have to learn all the five Greeks? All right. See, it's something like, if you know all the five Greeks, you can manage it very well. For buying side, what I would advise you is, I mean, uh, the probability of profit is much lesser. Okay, in the buying side, and for buying side, weekly options, yes, certainly you can go for weekly options. But if you know the Greeks, then buying would make more sense. Because I don't want to talk about Greeks and get confused with the topic that I've actually covered. If we are doing weekly expiry with strikes, all right. See, weekly options also you can select the same strike, but the same strike in sense the ATR based strike. Most of the time, if you construct it on a Friday, try to get out on Wednesday. The reason is, see, what will happen is, when you sell it on Friday, Saturday, Sunday is gone. So you will get bare minimum 2 days, 3 days theta. You'll get it. So there are people who in my group who actually does that kind of strategy, because 1 day passed, there is a theta component, right? There's a theta component in that. So if you have funds, if you have backup funds, right, you can sell it on on a Friday, okay, buy it back either on Monday or Tuesday, provided, I mean, it should be on the correct direction. So because there are a lot of other things, I don't want you people to start doing that from tomorrow, as tomorrow is a Friday, and I don't want you people to blame me saying that I gave a strategy and you apply. But again, there is a risk involved. Try to understand the Greeks very well, and then employ these strategies. Certainly will make money. Which is the best source for Greek to understand it? See, I cannot certainly say that there is one source as such. Um, the, there are few very good YouTube trainers who actually gives very good understanding. See, Greeks is more of theoretical applying because in a one liner, or we can explain things, but again when you apply it Greek, you should understand what is the exact thing that you're applying. So that is something what you learn over a period of time, or with experience. uh, I think I have covered all the questions. Let me check if I missed anything. Again, that's why this policy, that's covered. Yes, immediately options, that's also covered. All right. Hope I have answered all the questions. Bhupesh, yeah. All right. Which book is good? Which book? I, as I'm from the IT field, I don't get time to read books. So I've been, so I have, a lot of in my database. I'll let you know, Sanjay. So I'll send you an email. You can share me your email address or something, Say, thank you for your guidance. Thanks a lot, Bhupesh. Thanks a lot. All right. Thanks, friends. I mean, see, we are on dot at 10:15. Hope the session was informative and a different way of as my tagline says, looking options in a different way. So hope this made some sense, and you people learned something. And yeah, please keep in mind that as I mentioned, that disclaimer. So options has high risk. So be very very careful. If you ask me, if you want to make consistent returns, go ahead with selling options. But again, provided that you have a very good mentor, or once you understand stuff very well, right? So hope I will have more sessions in the near future. I'll certainly will be very happy to give another session. Right? Thanks a lot, guys. Thanks a lot. Right? Talk to you later. Good night. Bye bye.